Good morning. Welcome to Dornbush Download 176. Good morning, Rob.
Morning, Michael. How you going?
Yeah, not too bad. Not too bad. We're just trying to get through all of these company reports that are flooding us at the moment. I tell you what, it's enough to get the heart racing, isn't it? All these company results and numbers, but
Keeps us jumping out of bed of a morning at the moment. That's for sure.
Chomping at the bit, absolutely. But yeah, a couple of big names this week, Rod. I guess a couple of core holdings that a lot of people will have in their portfolios. Wesfarmers came out with
Wesfarmers
today.
Yeah, well, I've just got some figures here for Wesfarmers came out today, which initially looks a little bit alarming when we're talking about an 87% drop for their 6 monthly profit for ending December 2017. But when you dig into the detail, it was predominantly about the write down of their UK Bunnings business. Essentially, in 2016, they entered the UK market. They bought Homebase is the name of the Bunnings equivalent stores over there, with a 4 to 5 year plan. So they're in the midst of that at the moment, but their sales are down about 14% at the moment over in the UK, which is a little bit alarming, and the whole project's under review at the moment. They said they'd produce a report in June in regards to the review of everything. But Wesfarmers is a very diversified business. So that's just one proportion of the big business. You've got your Bunnings locally, like the Australian and New Zealand operations of Bunnings their earnings are up 12%. So it's going quite well. You've got your Coles. It's tracking pretty much sideways at the moment with Coles. You got your Kmart and Target. Kmart's going well, Target not so great. Which has been happening for a while. Kmart's been propping up Target if you look at the department store side of things. But overall, their department stores are up in regards to the earnings if you look at it as a whole. But Wesfarmers have also got your office works as well, so that's your office supply stores. They also own a couple of coal mines as well, and they've got their LPG gas production and distribution networks as well. They're a very diversified company. So if you look at the profit announcement, 86% down for that 6 month period, looks terrible. However, you dig into the detail, that's a one-off write-down of their UK Bunnings business that they're trying to obviously turn around. Their other operations are actually going okay. So their share price is actually up today by about 4%.
Yeah, that's right, Rod. Yeah, and this is it. Because they actually brought this to the market, I think it was earlier this month, wasn't it, that there was a bit of problem with the British Bunnings version. I think they call it Buki, the Bunnings UK and Irish business. $800 million. I think they cleaned off the value of the goodwill there, and as you mentioned too, Target also they wrote off a bit more goodwill there, about $300 million as well. So market knew this was sort of going to be in the detail. Then at early February, when they first brought this announcement out, of course they had a bit of a touch up.
Yep.
But certainly, yeah, as you mentioned, their other businesses are ticking along pretty well.
Like I said, it's not a total surprise to the market, and that's why the market's up today. What was the share? It's tracking about $42.42 just before filming. So so like I said, it's up about 4% since the announcement. So yeah, like I said, you just got to dig into the detail sometimes and have a look at the underlying reasoning why the profit's gone down. So yeah, not a bad result for Wesfarmers in the end.
Yeah, and typically a good dividend payer too, and that dividend's still coming out, at a pretty good rate as well.
Yeah, well, I think it's $1.03. It's a fully franked dividend, and that hasn't changed. That continues on. So that's part of the good announcement as well.
Yeah, excellent. Another one reporting this week or today too, Rod.
A big one?
Well, actually yesterday afternoon, I guess officially, because of the time differentials, I guess, with the US markets.
Yep.
The big Australian BHP Billiton, look, not as good a result as expected. Again, certainly some of the headline numbers look pretty good. Revenue was up about 16%, 21.8 billion US dollars, so BHP reports in US dollars these days. But earnings before interest and tax, depreciation and amortisation was actually down a bit due to a couple of big one-off items, and particularly a couple of cost blowouts in the copper division, predominantly around that Olympic Dam asset in South Australia. So BHP, yeah, a bit of a miss on the copper side of things. Iron ore and oil divisions still look reasonably good. They came in on consensus, but the coal division was down a little bit as well. So yeah, BHP copping a bit of a touch-up today. I think at last look they were down about 5%, something like that. I mean, having said that, they've had a pretty strong run, particularly in the last 12 months, rising commodity prices. But perhaps some signs that, you know, margins now are starting to get a bit squeezed. Wage costs are going up slightly, but you know it'll continue to gain momentum, I think, in that area. But perhaps the real blue sky for miners may be coming to an end. Look, there's still very strong demand for commodities around the world, but yeah, we're starting to see those expenses and those costs starting to come back up, which is taking the edge off some of those margins.
Certainly, like BHP though, it's still a cornerstone of some people's portfolio. It's just because of, once again, the diversification of what they're invested in. So it's just like similar to Wesfarmers, it's just diversified. So if you're in a big miner like that, like I said, some departments of the business is down, but some are up. So it reduces the risk to a certain extent.
Oh, absolutely. And look, and if you want exposure to mining, it is hard to go past BHP Billiton, that's for sure. But maybe on a bit of weakness over the next day, week or so, might be even an opportunity to top back in and buy a few more now that they're back under the $30 mark. So.
Well, we were talking about volatility over the last couple of weeks. Yeah. Volatility creates opportunity, so yeah, there is some dips in the market over the last week or so. So there's definitely some opportunities out there.
There's been real extremes, hasn't there? We've had some tremendous falls, and I see a little company called GetSwift, which is like a software service offering, is just getting absolutely poleaxed at the moment. And then we're seeing other companies, Appen, in a similar sort of industry, you know, doing pretty well. So it is a bit hit and miss, but yeah, gee, there's some really big ranges at the moment.
Yeah, sure. With the upside of things, like Seek announced their profit this week as well. They've online marketplace for jobs. Their profits up 21% to $102 million for the 6 months to the end of December. So that's partly like there's more demand for jobs. The jobs market's stronger, but also their Chinese online job market website over there is going really well. So that's contributed to the increase in profit as well. And another one too is A2 Milk. Mm-hmm. It's been a shining light for a long time, hasn't it?
It's been one of the best performing stocks now for 18 or so months. It's been a tremendous little company for sure. Well, it's not so little anymore now, of course.
It's growing because its profits up a lot as well. It's joined forces with Frontera Milk, like a global dairy company. So that's going to help them roll out some more products to the market. So that's helped them. But their baby powder products and liquid milk products have been going well anyway. But then you add Frontera to the mix as well. Their profits up, their share price is up, and it's just. Like I said, it just keeps going from strength to strength.
Oh, look, it does. And we've mentioned A2 Milk a couple of times on the download, and even at $10 plus now, I think it is.
Yeah, it's over $10, yeah.
It's probably still worth a look at because, yeah, they just keep expanding. The overseas operations are going really well. They've got a great product. There's still looks like there could be a bit more blue sky for those guys.
Well, the Chinese market's a big part of their success, and the Chinese market just carries on, doesn't it? Look, they expand more and more into China. So
yeah, absolutely. No, but mate, yeah, as always, a heap to talk about reporting season.
We could be talking about the weather now because it's just starting to belt down here
starting to
at Dornbush Partners.
We better get inside by the look of it. Thanks again for watching.
Thank you.